this move higher in gold has been building for quite a long time, and actually many of the points at which the market and many analysts have thought it's peaked, it's been able to carry on rising. And I think that's because there's sort of two different stories driving gold here. So one is the physical demand. That really started to shift in 2022 when we saw central banks buying a lot more gold. They doubled their rate of purchasing from the previous decade, and that has sustained. And then more recently as well, investor demand for physical bar and coin, and even ETFs starting to step in the last few months. So that's actually new inflows to gold coming through here, and arguably plenty more to go here. And then there's also the macro angle to gold of, how does it compete in an investor's portfolio against rates and equities and bonds? And that should be arguably getting better from here. We've had tough macro backdrop for gold with this high interest rate environment. So as these come down, actually that arguably should be a tailwind for gold. So as long as the physical can hold and then the macro factors come through, we would say gold hasn't peaked yet.
Dive us a little deeper into the interest rate dynamic there, because you mentioned it. If the interest rate expectations come down, then therefore gold rises. But the Fed isn't exactly leaning in that direction. The ECB is. Other parts of the world are. The UK, maybe. The BOJ, certainly not. And the Fed is really on pause. So that expectation that would be a tailwind to gold, hasn't that just kind of bottomed out?
Yeah, so I guess you could say the rates are still quite elevated relative to where they were before this rate hiking cycle. So it's really about the direction of travel here. Have we peaked, and are we generally moving lower? And that does make gold relatively more competitive. As you say, it may be slightly on pause this year, and that's where that physical demand story remains important. So we do also need to see that holding up. Those ETFs have just started to see inflows, the gold holding ETFs, and so we would look to that sustaining to believe that this rally continues to have legs.
How self-limiting could this be at the kind of price point that you think gold will peak at, so sort of 3,300? If we get there, what happens? What is it that limits the rally from there?
Yeah, so our bull case on gold goes to sort of $3,300, $3,400 an ounce this year. I think, whenever a commodity price rises, we do start to worry about demand destruction, particularly when something's moving very, very quickly. For example, jewelry, that's around double the size of what central banks are buying each year. Yeah. And often when you go to buy jewelry, you go with a budget. You don't go with an amount of gold you necessarily want to buy. So you do naturally get that effect coming through. You get more recycling supply as well. And even central banks, we've seen the Reserve Bank of India pausing in both December and February. So sometimes we might need to see a bit of stabilization, I think, for that flow to continue.